The short answer is no, they're not. I mean, trade deficits or surpluses, they're not inherently good or bad, right? And we've got a long history of surpluses and deficits. We've got a long history of market returns and economic returns. And what we find is there's no they're there. They're not predictive. They're not coincidental. And, anytime you run a trade deficit, on the flip side, you also run a capital account surplus. And generally speaking, when a country runs a capital account surplus, that's not such a bad thing. It's a good thing because you've got foreign capital that's being invested into your country. And if you think about, let's take the United States, for instance. We've run a trade deficit with most other countries, meaning we're buying a lot more from those countries than we are selling them. That leads to the deficit. That's been happening, you got to go all the way back to 1975 since you had your last trade surplus here in the United States. And think about how our economy has done relative to the rest of the developed world over the time frame. I mean, I can make the argument we're one of the fastest growing economies in the developed world over that time. If you think of various metrics such as income per capita on an inflation adjusted basis, to home values, to stock prices, to consumer net worth, all of those have grown tremendously since 1975, and that's despite running perpetual trade deficits going all the way back to that time. So there's really no there. Ken likes to draw the comparisons about two major trading partners. I mean, you think about France and Germany, for instance. Germany has long run trade surpluses. France has long run trade deficits to one another. And if you look at the performance of those two economies going back in time, they just ebb and flow with normal volatility and over longer periods of time. In fact, France has done just a hair's whisker a little bit better. So, if you think about trade deficits and if you're worried about trade deficits and their impact on markets or the economy, in fact, there's really no there, and we got a long history to demonstrate that.